Good day, fellow investors. Last week we discussed how I made a transaction in the portfolio. I sold Amazon and there were so many great comments, and I thank you all for them, where you practically painted everything that's core important for investing. I want to go through those comments and then also discuss, again, reiterate why I sold Amazon, holding, selling something, which is the key question when it comes to investing, being 100% investment, the YouTube portfolio, my research platform portfolios, how I try to fit that one into another to give you as much value as possible everywhere. And then there were a lot of comments about buying bonds, but I'll make a special video really to have it separate here tomorrow. So let's immediately start and reiterate. I just showed the transaction in that video, but why I sold Amazon, how that I think is value investing, and there were a lot of comments about that. So when I bought Amazon, I already explained there was a strategy. Amazon stock is a better and better buy. That was at 90. And there was the risk there, it could go another 30% lower, but the reward was also there. And that was a good risk and reward, but the key was the strategy, because at 90, Amazon is flirting with value investing. Why? Because at 80, 90, 100, it can go another leg down. In a case of a recession, a market crash or whatever, it can go to 60. But if that happens, this is purchase number 1. If that happens, purchase number 2, and then purchase number 3 in case of a huge crash. But I know that thanks to the business value Amazon has, the ecosystem, the infrastructure, everything that they are building and investing over the long term, value investing is about thinking long term, not always acting long term. That's something people tend to be confused about. So long term looking, Amazon at 1 trillion market cap with a good strategy is a value investment based on the strategy. So when I bought, I said, okay, now the first leg, I was ready for more purchases. That's why also I have the cash there on the YouTube demo educational account, because I was ready for more. Because value investing is first about managing risk. And the key is that with Amazon, with 1, 2, and 3 purchases, with that strategy, it was very hard to lose money. That's the value investing I see there. So first, managing risk, and then as the strategy was successful, we made 30% in a few months. Few comments, thank you Sven, but okay, I think that those that thank me are silent usually, but that's also something that's very important when it comes to investing. That was part of my strategy. That's it. We made 30%. That's it. That's done. When it comes to new flirting things with value investing, when I can apply such a strategy, I'll do that again. And I hope to give you value through doing that on YouTube. So that's what I do. You see how it fits you. I cannot not do myself, because that would be chasing trends, chasing YouTube, chasing algorithm. That won't be genuine, and I think there's plenty of that on YouTube, so you don't have to get that from me. But let's now go to holding and selling stocks. Another thing that I have seen in the comments was that many of you just discuss, just hold Amazon, I'll continue, retire, and let the winners ride. You'll end up feeding weeds. I get money on the table, but not convinced in and out beats buy and die. And then if you go to the best long-term investor ever, this is a must-watch video. Type this into YouTube search. Buffett usually sells 9 out of 10 stocks that he holds, and just 1 out of 10 is a long-term buy and die. Just 1 out of 10. That is what people forget. But He sells so much of his portfolio that is insane how much, because he is also focused on risk first, and only in the rare cases when he finds, first he looks at 1,000 businesses. Of those 1,000 businesses, he selects one, he buys, and so does 10 times, and then of those 10,000 businesses, of who knows how many, at the right moment in time, just one stays in the long-term portfolio. So you would say Warren Buffett is a huge trader, but only very rare businesses are there left in forever, depending on the price and also on the size for him. And here was a great comment by Beyondic or Beyondich or who knows, that we can discuss. Since the launch of the portfolio a year ago and after this last sale of Amazon shares, I must respectfully admit that the YouTube portfolio reminds me more of Michael Burry's portfolio, where profit is taken after a particular jump of an individual business, momentum trading, and less of real value investing. As I explained before, my perspective on value investing is risk first. And as if there is no idea of a couple of businesses, point two, of businesses that would be the very base of the portfolio. We focus on risk first, and when there will be no risk or lower risk, those businesses at the base of the portfolio, if I can find a few per year, per decade, that will go into my research platform. So here I try to educate as much as I can for free, but also thinking as a function of price. You're probably right on Amazon and especially Meta after the recent price jumps, but I still can't shake the impression that it's about taking profits. For me, that's just the result. It's about risk, and very few focus on risk. And there were many comments, and I sense that many of you don't focus on risk first, which is not value investing. And then you might see it as momentum trading, but I didn't buy Amazon because I wanted it to go up. I bought Amazon because I was ready to buy 2 legs lower as part of my strategy, and I thought that over the long term I won't lose money. That was my strategy. Not that I'm buying and selling. I didn't buy Meta a year ago because I thought it will go up. No, I thought that at that price I'm getting everything for free and the P ratio 10 business cheap. When it doubled, then it's P ratio 20 and no more value investing, not momentum trading. That's very, very important to understand. And then where is that Svenka Lind from the end of 2022 who was 100% cash and was not afraid of a market collapse? Buy more. With all due respect, I'm sure you can do much better. Not in the percentage of return, but in the feeling of real investment. Invested, yes, but depends on opportunity, and unfortunately or fortunately for me, guys, you don't make much money. YouTube, maybe we make $1,000 from advertising per year. I cannot go and chase trends. I have my research platform. I share part of it here on YouTube, and that's it. But I cannot live on $1,000 a month. I cannot show you everything here. I try to do my best to give you value. Many of you appreciate that. Very grateful for that. But always keep in mind my position when it comes to just giving you everything. Managing a portfolio here on YouTube is very hard. We try with its and bits, made you 30%, so don't expect miracles on YouTube. If you actually want to manage your financial life on YouTube, you are in a dangerous situation. So here they say, good move to take profits. As you mentioned, this is not value investing. Did I mention it? This is value investing, not trading. Shit is gonna hit the fan. That's now trading. I'm just doing what I do. And if you watch my most important videos, Margin of Safety, Seth Klarman, if you go to this one, Portfolio Management and Trading, when to sell a stock, please, how to buy, when to sell, check that video out alongside that one of Buffett. I'll put the links in the description below. Another great comment by Kevin here. My philosophy is different than yours. Chances of buying Amazon at 92 like I have is unlikely. Why sell? I understand your plan, but I think you will regret your decision. Just my opinion. I'm up to 120% on Meta and have no plan on selling. Market goes up and down in the short term, but the market always goes up in the long term. And this is, again, the market might go up in the long term. Meta and Amazon, you never know. You have to analyze those businesses, know those businesses. For now, in my research platform, I have much better businesses than Amazon at 130. Risk and reward. I like those things much more. And therefore, when something is flirting with value investing, with low chance of losing money, I'll put it in. Now, Meta and Amazon, simply too much risk for losing money, and therefore it's not in the portfolio. It's as simple as that. Then let's really discuss. I am almost 100% invested. I invest on a monthly basis on my research platform. As I said, this is where I make my living, and there are a lot of customers, hopefully very happy customers, that enjoy that. They pay the price, get the value, and one email a week. And I cannot show that on YouTube, and that's the perspective maybe you are missing also when I do that. But also, I try to make videos to put one single idea in a video, because nobody is going to build something over 7-8 videos. So always think about what that specific video is about and not others. If your YouTube portfolio is for learning purposes, I don't understand why are you keeping a large amount of money that's not invested. What's the point of it? Excellent question. So I don't know where to put it yet. If I think at risk. So I think at risk, I focus on risk first. When I find ideas, strategies where we cannot lose much money, but we can make okay money sooner or later, that's what I will put in the YouTube portfolio. And managing a fully managed portfolio for free on YouTube is too crazy, and it's also not feasible because I cannot find that many ideas. I gave you on the YouTube portfolio in a year Meta, China stocks, the right timing, and now also Amazon. We are 20% up in a year on actually 30% invested. So I gave you 3-4 great ideas that did greatly that you could incorporate in your portfolio. More of that is on my research platform. And if I give you an idea every 4 months that gives you 20 on 30% invested, that's 60% on fully invested per year. I rest my case. And also, fully managed portfolio, you have plenty of those on YouTube, but keep in mind, those have the hottest stocks, because the hottest stocks give you views. So be very, very careful on what people are talking and what. And it is very simple. Just check my stock market research platform, link in the description below. You can see what I do, and to make an informed decision, buy the course. If it's not for you, send me an email at investwithsven@gmail.com. So you have the email here, investwithsven@gmail.com. If it's not for you, you will make an informed decision by trying many covered stocks here, a lot of research that we have done. If you just check the curriculum, and from this research, don't get overwhelmed. I try to do my best to source the few best ideas and then also apply on when is what a buy, what is the risk and reward, so that you can see how it fits you. So one day the YouTube portfolio might be fully invested depending on the market. Again, another investor fallacy that I feel in the comments is I want it all and I want it now. Oh, now I have 5 minutes to invest my $1 million, puff, put it in one. Go to an investment banker, they will be happy to take your $1 million in 5 minutes, and you don't have to think about it. There is a solution, financial solution for everyone here, but don't waste your time commenting if it's not for you. Check my research platform. I'll now film the bond video, so we will discuss that tomorrow. Thanks for watching. I'll see you in the next video.